All right, guys, let's get into GBPUSD from the 13th. So right here, I sent out this markup. It says wait for confirmation or market execution and in the zone. Now, it's not usual that we do market execution at the zone before confirmation, but we'll walk through why we decided to do that here and why this setup is valid overall. So looking at GBPUSD, here's the first things that stood out. So what we see is, or what I see is that we are in a downtrend. So the way that I identified that this is a downtrend is simply because I see a combination of lower highs and lower lows. I see that the highs are getting lower and that the lows are getting lower, and that structure is being broken. Structure is being broken on the way down. So which means that supports are being broken. So this starts here. This is a low, and this is the high. Okay. So with this low and high, what do we see next? Well, next thing we see happens is that there is a lower low and a lower high. Okay. And this low broke structure of the last low, right? So every time you see a lower low, that's also structure that was broken, which is bearish movement in the market, right? Then after that, with the exception of this second lower high in a row, we also see a lower low, right? This low, which was lower than the last low, right? These are signs that the market does indeed want to. Well, shows that the market doesn't show that the market wants to do anything, but it gives evidence that the market is bearish and evidence that the market probably wants to continue downward. So second, what I see here is the market pulls back to an area of supply, and as we know already, this is when we see an impulse that breaks structure. The origin of the move is marked. That's the supply or demand. It fills on the bottom, and also confluence with an area of support and resistance. I see that this bottom, this wick right here, this area where the market reversed, this is an area of support, right? Where the market was previously going up at this area, up once, up twice, and now the market pulled back to that area again, and it wants to use that previous support as a resistance. So we have confluence between supply and demand and resistance or support. And that alone was enough to validate this zone to be tradable upon confirmation. However, the only reason why I decided that this is something that is worth taking a risk without confirmation is because we had our inducement, right? Which right here, this wick right here was our inducement. And again, inducement is just when the market comes close to that area of execution, that supply or demand zone, but doesn't hit it, and the market decides to drop or move from there and break the previous structure to where the market started that initial pullback. Drops down, breaks that structure, and then it pulls back, sweeps the liquidity of the people that had their stop losses here, the people that were induced to get into the market thinking that this was going to be the move that caused the market to drop down and continue that trend to the bottom. But instead, that liquidity was used so that the market has more power to take the market down from here, right? Which I just like to draw this cipher harmonic pattern whenever I see inducement, because one thing that I like to note is that the B leg here, this is the B leg, which says B has to be at least 0.382, and that the C leg has to break the A leg for this to be valid inducement. So just two rules there. Okay, and let's see what happens. Drop down to the 5-minute time frame. This would have been the original entry if you gotten in the pending order. And the market moves in levels, and if you're trading these inducement patterns, a lot of the times you can take the market to this C leg as a take profit. Secondarily, we can enter off of a bearish confirmation with our momentum indicator, where we need to see our color going our direction, as well as a bearish candle, which we have a regular bearish candle. and we'd hold that until either this level is hit or we get a confirmation to close by seeing a confirmation in the opposite direction, which is the rule that we've always had. So take a look at that. This is what happened, right? And there was this blue mark, this blue bar that appeared. However, the reason why this blue bar was not valid to close, the reason why this did not fit our closing criteria is because look at the candle. This is a bearish pin bar. This is a very bearish signal right here to have a candle like this. I would not close a trade that just gave me a bearish pin bar like this, right? So at this point, if you traded this as a pending order or no matter what you did, if you had to take profit set at the C level, you'd be out of this trade. And if you continue to hold until you got your exit confirmation, it looks like in this case you would have been getting out right about here. Or I should say, since we were already pretty deep in profit, I would have exited on the 3-minute time frame. Yeah, it looks like you would have pretty much gone out at about the same area. Which is right about there. Okay. But this was GBPUSD.